In this video, we are going to look at an example of a third-degree fractal hybrid divergence in the 15-minute timeframe of a rather exotic currency pair, which is the Australian dollar versus the Japanese yen. I want to stress out once again that it doesn't matter the instrument or the timeframe we apply the fractal flow strategy. The analysis is exactly the same. I'm showing you various examples in different markets and timeframes to prove that point to you. From numbers 1 to 3, we can see a major market movement formation. Number 3 is a confirmed solid market structure since the market obviously broke it to the upside. However, notice that from number 3 on, the market enters in a stair-stepping up motion in its minor flow. I want to grab your attention to a trade idea that could have been taken in this chart between number 4 and number 7. Look at how simple this trade idea is. Between number 4 and number 7, the market is gently creating higher highs and higher lows. Notice that number 7 is a fractal candle that landed in the turning point line of the market vectors between 4 and 6. We have a solid minor market structure in number 5, which would have been a perfect place to put a stop-loss order with lots of headroom to collect profits up. Notice that fractal candle number 7 is also an outside candle, which is just icing on the cake for this long trade idea. Another important detail here is that our fractal candle happened inside a hidden divergence, which makes this a second-degree fractal hybrid divergence setup. This is as perfect as it gets in terms of second-degree fractal hybrids. As usual, the stop-loss could have been placed a few pips below the fractal candle or a few pips below the solid market structure in phi for a double layer of protection. However, this video is about the third-degree fractal hybrid trade you see opened in the chart. I just wanted to show you this extra example because it had such a perfect formation. Back to our analysis for the current trade, we can see that from number 4 to number 8, the market creates nice minor higher highs and higher lows. From number 9 to number 10, an interesting thing happens. Notice that in number 10, the market attempts to create a higher high than number 8. Price gently pierces the high number 8, but it never closes above it, which makes the low number 9 a fake market structure. The logic behind this idea is that the buyers that were responsible for the market vector between number 9 and 10 were not strong enough to surpass high number 8, so we cannot be sure about their strength in this point. Notice also that there is a fractal candle in number 10 that is happening in the divergent price territory above number 8. Very obvious short trade setup, but since we are dealing with a clear uptrend here, this would be a quite dangerous trade to take. As you can see, even with this dangerous trade idea, you could get away with it, and you could even get a nice risk-reward ratio out of it. However, you must resist the temptation to take these sorts of trades for reasons that should be pretty clear to you at this point. In number 11 is where the subtle details happen to solidify the current long trade idea. Just as a parenthesis, if you were a trader that was aware of divergence but not aware of fractal divergence, you would miss this opportunity completely. As we can see here, there is a hidden divergence happening between low number 7 and the potential low number 11. We are only considering number 11 as a low because of the fractal hybrid divergence. Notice that before number 11, I drew 3 gray vertical lines on the chart. If you pay close attention, you will see there is a reversal divergence happening between the two outer lines marked by the sloping short red lines in price and in the relative strength index. There is also another reversal divergence happening between the center gray line and the right gray line, which is our fractal candle number 11. This is marked by the tiny sloping blue line in price and in the relative strength index. These 3 divergences can be classified as a third-degree fractal hybrid because in the larger fractal, we have a clear hidden divergence. In the lower fractal marked by the sloping red lines, we have a reversal divergence, and inside this reversal divergence we have another reversal divergence signaled by our fractal candle number 11. This is a great example to prove how important it is to pay attention to the precise alignment between candles' tails and the peaks of the relative strength index when the correct time comes. You might be wondering what other contextual elements we have to trigger this long trade idea other than the third-degree fractal hybrid divergence. Since we're dealing with a minor flow here, we can say that the last time successful buyers appeared in the market was in low number 7. Here is where we reach one of those situations where we need to take unknown risks. We are too far away from low number 7 to place a stop loss there, but we have a third-degree fractal hybrid divergence happening in the same level as a minor consolidation marked by the red rectangle between 7 and 8. Beyond that, the horizontal black line that is coming out of high number 6 is a support and resistance line that is meeting the low of our fractal candle number 11 almost perfectly. Notice also that inside the red rectangle there are 3 candles. The first one zooms the line coming out of high number 6 with a certain volatility that cannot be found in the surrounding candles. Our fractal candle number 11 seems to be the first test of the support line that used to be resistance. Our only choice to place a stop loss here is a few pips below the fractal candle number 11. The long position you see on the chart was triggered roughly in the opening of the candle next to the fractal candle number 11. As far as our target goes, we are going to take a different approach and use a dynamic target. Notice that we have an upsloping black line that comes out of number 7 and connects to the low of our fractal candle 11. We extrapolated this line and placed in the high number 8, which seems to be the outer edge of this market up to this point. These two lines have the exact same angle and they serve to delineate future extremes in price. We will talk a lot more about these types of lines in the Pitchfork Master Strategy and in the Hidden Lines Strategy courses. For the purposes of the fractal flow method, you could simply double the range of the vector between 10 and 11 to form a target, or you could use any logically based place to give you at least a 1-to-3 risk-reward ratio on this trade. However, as I said earlier, I want to give you a taste of how a dynamic target works in real time. The idea behind a dynamic target is that the longer you stay in a trade, the more you should be rewarded, since we are increasing our risk exposure. By attaching your target to an upsloping line in the case of a long trade, the longer you are in the trade, the greater your target will be. You just have to update your target order in each candle opening. The target should be placed in the intersection of the current candle with the upsloping black line coming out of number 8. Notice that the initial risk-reward ratio of this trade is about 3.8. However, if we happen to be correct in our analysis, our dynamic target will give us the opportunity to close this trade with an even better risk-reward ratio. Let's see how the market develops. Here we can see that we successfully hit our target. By the way, look at how much our target increased with that dynamic upsloping black line guiding our order. Our trade began with a 3.8 ratio and closed with a 5.7 risk-reward. This is the power of dynamic targeting. I also want you to notice that the lower upsloping black line that we drew from number 7 and connected to our fractal candle number 11 served as a sloped support for the market, which touched the line 3 times. There are situations where lines like this can be used as a secondary entry, or an auxiliary entry in case you missed the first one. I would say this trade is more of an intermediary level because it required that we assumed some dangerous ideas like relying on a minor consolidation to ground our stop-loss idea despite having a pretty good fractal hybrid. Hopefully you were able to enrich your level of understanding of the fractal flow method with this example.